China once again rattling oil markets this morning as concerns grow that the zero COVID reversal could lead to a huge spike in cases. This comes at the same time as Russia bans the sale of oil and petroleum products to countries and companies that comply with that price cap agreed by Western nations in early December. Here to discuss the impact on consumers and outlook for the global energy markets in 2023 is Phil Streible, Chief Market Strategist at Blue Line Futures. Phil, it's good to see you. It's so interesting. Let's take the China situation first. Everybody was waiting for them to reopen, that would be a positive event for oil markets and the global economy generally. They're reopening, and yet it's not going quite how perhaps people would have hoped. What's the effect? What's the feedback for the oil markets here?
You know, there's two sides of the story. So you get China reopening, so you get this small uptick, in the demand growth within China. However, the response, if you were to flip the channel and you look at other countries like Japan and countries throughout the world, they are actually limiting, and now they implement the restrictions where China relaxes the restrictions. The other countries like Japan increase those restrictions on incoming Chinese citizens. So, it's two ends of the spectrum here, and that's kind of the way they're going to play it going forward. I think the number of cases that have gone up in China is a bit alarming, and they are really dropping their guard on this thing. They do need to stay in front of it, though, if they want to see this reopening go smooth.
Well, it's alarming as well because of the other countries around the world that could potentially be impacted and perhaps already are seeing that impact depending upon where travelers are coming into or where travelers are going from China as well. And so where in this kind of immediate or near term would you be tracking to see where those impacts are being most felt and where markets may be reflecting that as well?
Yeah, we're starting to look at where those restrictions are being in place. Like I said, Japan was a major one of them. You see Australia and other countries are implementing them. But, when you go into the global energy outlook and everything else, I mean, we really have three main concerns, and the China reopening, is one of them. They are a big player in everything else in the energy demand, but also the recession risks, not only in the U.S., but globally. How deep is it going to get? And then it's those geopolitical risks, what you guys were mentioning as far as Russia banning the sale of oil to nations utilizing that Russian oil cap. Those are one of the geopolitical risks. So you've got the Russia-Ukraine conflict. You've also got U.S.-China. And then you've got a number of different wild cards out there, such as the weather. I mean, just last week, nobody was really traveling. We saw all these flights getting canceled. That's going to impact that supply-demand balance on the energies. And if you get more of a mild winter, like what we're supposed to get in this next week, you'll start to see heating oil prices, natural gas, those are going to start to build up. Prices are going to come back down. We've already got natural gas significantly lower today. You've got the other energies correcting. While crude oil and gasoline, those tend to get a bit of a boost when you get those mild type of winter effects.
Phil, if we're sitting here 6 months from now and we're talking about a somewhat successful reopening of the Chinese economy, where are oil prices?
It really depends on how this recession hits not only the U.S. economy, but also the global economy. There's no telling as far as Russia and Ukraine. You get two different stories there, whether or not they're going to have some kind of peace talks. We saw last year, if you look even coming into, 2021, you go into November, you go in around this time, we saw a spike in COVID cases. Things started to lock down. Oil prices went into an absolute free fall. And then what happens? You get the Russia-Ukraine conflict. Oil prices go up to $120. It's difficult to predict that far going out. If you do look at the way the rollover structure is, you're getting this positive rollover where you look at the February contract right now for crude oil, it's right around $78. You go out to the end of the year, it's about $75. So they do expect supply to come up, demand to come down a bit, more of some of a balance on the structure of oil going out through the rest of the year.
And then, Phil, following up on, you mentioned Russia, Ukraine, I do have to ask about the price cap sort of reaction on the part of Russia. How do you think that plays out?
It's really tough if you see countries, because of the fact that Russia's not going to participate with them, none of the oil is going to flow that way. That could cause certain countries to have shortages on some of these products, and there's no telling what it could stem from if they're not seeing those Russian oil caps go on. Russia retaliates, starts cutting off natural gas supplies to Europe, that could really cause another shockwave. I think that Europe and other countries did a great job stockpiling ahead of this winter. We are seeing a more of a mild winter, and we should see more mild conditions in the spring. So I think that energy prices are going to remain relatively tame. I do think, though, pushing on past that conflict, remember Russia is one part of OPEC Plus. I think that OPEC growth, non-OPEC growth, is going to be very slight at best. I think that global supplies are going to remain tight, but it's really OPEC who's going to control the production side of things. And I think they're very comfortable with prices, in the high 80s into those mid 90s. Once they get over 100, it rattles the cages on the politicians. So I do expect oil prices to shoot up to about $95 some point during the year. They probably could average right around $90 as the year goes on.
All right, we're going to be keeping close tabs of that. We know you will be as well. Blue Line Futures Chief Market Strategist Philip Streible, thanks so much for joining us today. We appreciate it.